Hi there, welcome to Kneppy Invest. Today's video is inspired by a comment from Manny M in one of my videos. Hey Kneppy, are you thinking of doing another Q&A this year? The year has just started, so I have about 11 months to do one of these Q&A videos. But this comment did inspire me to get stuck straight into it and not do one Q&A videos, but do two Q&A videos. And the reason behind doing two Q&A videos is the whole purpose of this particular video today is if you want to ask me a question, leave in the comment section of this video and then I'll answer your questions in future Q&A video or videos depending on how successful the first Q&A video is. Now, the other thing is, depending on how many questions I get, I'll either do or answer every single question, or I might have to filter down the questions to the highest quality questions. So make sure you leave a high quality question, particularly if there's a lot of questions being asked. And I don't mind answering any sort of topic, but I would prefer your questions to be in relation to investing. Now, I want to leave a little bit or put a little bit of content in this video instead of just me asking you what are your questions to ask me and leave it in the comment section. So what I thought I'd do is I'll go through two investing books I am reading right now. One is on technical analysis and the other one is on fundamental analysis. In fact, both books are fairly famous in their areas. Technical Analysis of Stock Trends by Edwards, McGee, and Bassetti. I think it was originally done by Edwards and McGee. Was originally written 1940s or 50s, and it's in its 11th edition. And I have heard this is one of the favorite books for technical analysis-minded people. I have just started reading it. I'm about 100 pages into it. It's about 600 pages long. I actually did download it, so it's not actually a physical book. And it started out really interesting, talking about Dow theory, that sort of thing. So at this point in time, I can't give a recommendation to this book, but it has started out well, and it is a highly recommended book if you are or want to learn more about charting. Now, the second book I'm reading is a fairly famous book called Security Analysis by Benjamin Graham and David Dodd. This book was originally written 1930s, I believe, and it has been updated quite often. 6th edition, in fact. I have the book right here, and this is it. Security Analysis. I'm not sure how much I had to pay for this. Well over $100. A fairly dry book. I have started reading it. I'm not sure I'm going to go through every single thing because there's a long section about bonds, that sort of thing. But one of the reasons I wanted to read this book was, if I go to the chapters here, there's sections on the analysis of the income account, the earnings factor in common stock evaluation, balance sheet analysis, implications of asset values, and additional aspects of security analysis, discrepancies between price and value. So one of the things I really want to learn is how to decipher financial statements a little bit better, because I don't have a background in accounting. I have a background in economics. So in economics, you do a little bit of accounting, but not a lot. And I really want to understand accounting a little bit more and definitely understand how accountants can manipulate financial statements. And that's very important. And that will become even clearer when we talk about my best investing decision, which turned into my worst investing decision. So let's talk about that right now. My greatest investing decision began in late January 2017, when an Appendix 4C popped out from a company called BigUn. Their ticker code at that point in time was BIG. Share price of the company was around 30 cents. Market cap was about $30 million. And when I saw this particular Appendix 4C, I did come away a little bit impressed. Now, at this point in time, I did not know much about what this company did, but receipts had absolutely exploded in this quarter. The first 9 months of this particular year, receipts had only been $2.5 million. So $2.5 million of receipts in the first 9 months. And in this particular quarter, they had receipts of $4 million. And not only had this company saw an explosion in their receipts, they also had become operational cash flow positive by $376,000. So I didn't know much about what the company did. All I knew was I was impressed about the growth in this company and they were operational cash flow positive. So I decided to take a position in this company. And then over the next 9 months, I did a little bit more research on the company, and I didn't quite understand their business model because it seems like all they did was take videos of businesses like restaurants, and then the restaurant or the business would pay them a certain amount, and some of these amounts that they were getting from these businesses just to do videos was something like $12,000. And I just did not understand why or how this business model was producing so much cash. But it was working. And if we have a look at the September quarter, only 9 months later, cash receipts had grown from $5 million to $15 million, and the company was operational cash flow positive in this one quarter by $5.6 million. And not only had I taken notice to this massive growth in the business, the market has as well. And the share price grew from 30 cents to a share price high of $4.90 in November 2017. Yes, I was a shareholder of this company throughout that whole period, even though I did not understand how this business model of BigUn actually worked. Now, I did get some advice from a colleague at work, and he said, if you don't understand the business model, yet the company has been doing really well, take some profits out. Stay invested a little bit, but make sure you do take profits out, because trust your intuition, trust your judgment. Because if you don't understand how this company is growing, there might be some problems with the company itself. So that's exactly what I did. I did take some profits, but I left a little bit of my investment in there just in case my intuition and my thoughts were a little bit wrong with this company. And then the proverbial SHIT hit the fan only a few months after November 2017. And it really started with a couple of articles from Jonathan Shapiro of Australian Financial Review. And this particular article was titled BigUn Limited's Cash Flow Secret Revealed. And the share price at this point in time was $2.77. The article was released February 8, 2018, so not long after that really stellar September quarter results. And as it turns out, my intuition was right. Now, you might say, well, how is this a bad investing decision? I'll come to that soon. But what BigUn was doing, they had a relationship with this company called FC Capital and its subsidiary Finstro. And what they were doing, BigUn were doing, well, they were getting their camera crews to go to these businesses, taking videos, and the business wasn't paying for those videos, but they were getting money from FC Capital and their subsidiary Finstro as if the business was paying them the $12,000 for that video. And very few businesses were paying BigUn for that video. So it was sort of like advancement on the videos they were doing for all these businesses, and BigUn were assuming the majority of these businesses would pay for the videos, but they weren't paying. And that's how this all came undone, because of Jonathan Shapiro's investigative reporting. Now, why was this a bad investing decision? Well, let's see what happened in the next few weeks with BigUn. It took only 11 more days before it all went pear-shaped for BigUn. From that release of that article from Jonathan Shapiro on the 8th of February, on the 19th of February, BigUn went into a trading halt because they had to respond to an ASX aware letter. And this was it for BigUn. They never went back to trading. In fact, the company went kaput. It was a complete and utter manipulation of cash flow statements. So what they did was to make it look like the company was performing way better than they actually were by getting this money from this Finstro in regards to them doing videos, and they weren't getting that money from the businesses, from the restaurants. So it was complete manipulation of how this company was performing. At this point in time, if I remember correctly, no one has been charged with any financial shenanigans. So I don't want to say anything bad about management because I just don't know the full story. There might be some innocent people within the management teams. But at this point in time, share price, when they went to a trading halt, was $2.22. The market cap of the company was something like $300 million. So that's $300 million of people's savings and investments that was completely wiped out by this financial statement manipulation. And that's one of the reasons why I want to read security analysis. I want to try to understand how accountants can manipulate financial statements. And that's the simple reason why I am reading security analysis right now. So why was this a bad investing decision? It all comes back to a lot of my decisions were the right decisions. For instance, I saw this company was growing at a fairly good rate, that the cash flow was increasing and the company had become operational cash flow positive. That is what I'm looking for in an investment. And that's what the market always also saw. And that's why the valuation of this company increased from 30 cents to a high of $4.90. The other good thing I did was I listened to my intuition, listened to the questions I was asking about how this business model was working. Why was this business model generating so much cash? And then I took some profits out, not all my profits. So I still had something like $5,000 invested in BigUn when they eventually went kaput. So I lost that $5,000. But that's not why this was a bad investing decision. The reason I think of this as a bad investing decision is because I came out fairly well in this occasion. And it makes me sick to the stomach that I had a 10 bag. This was a 10 bagger for me overall, even though I did lose a little bit of money. When I took profits, it was up about 13, 14 times. So I came out with significant profits from BigUn. And it just makes me sick to the stomach that this was, I'm not going to say the word, but this was manipulation of financial statements to make the company look a little bit better. And I financially benefited from that when a lot of people lost a lot of money. And that's why this was a bad investing decision, because I think about BigUn all the time right now, simply because I benefited from what this company and the management did. Not all the management maybe, but some of the management definitely would have known what they were doing. And that's why this was a bad investing decision, simply because I think about this all the time and it just makes me sick to the stomach what happened. Now, there were some lessons I did take away from the BigUn story. And even though this was my most profitable investment or trade, it was a complete and utter, now I've left the word blank, but it's a 5-letter word, starts with F, ends with D. And it's not a good feeling right now that I have that there's been no one charged with this F something 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 D. And I think that ASIC and ASX have dropped the ball on this one. I'm not sure who's in charge of looking into these sort of situations, but something's amiss here. That $300 million of people's savings and investments was completely wiped out by this manipulation of these companies' financial statements. And it's not a good feeling when you have someone like me who has made a mozza from this particular situation, because it's my best trade ever and I don't want it to be my best trade ever. It just makes me sick to the stomach that a lot of people lost a lot of money. Some of the things I did learn from this particular story is that the cash flow statement can be manipulated. And one of the reasons I always start with the cash flow statement when I read the financial statements of companies, it's the statement that's least likely to be manipulated by the company. And when I talk about manipulation can occur legally and illegally. So it's the least likely statement to be manipulated, but it can be manipulated. The other thing I've taken away from this story is don't dismiss investigative journalism. In fact, I went back to Hot Copper website and I went back to 2018 to see how people were reacting to Jonathan Shapiro's investigative reports on BigUn. And he was named, called, and more than likely on Twitter, he was named, called all sorts of bad things, and his reports were completely dismissed. But he probably put a lot of time and effort to discovering what BigUn was doing. So don't dismiss investigative journalism. That's one of the biggest takeaways I took from the BigUn story. And just talking a little bit about BigUn, I just think I might have to do a dedicated video on the story because it's a fascinating story about how this company completely manipulated their cash flow statements to seem like the company was doing way better than it was. And we can learn a lot from what BigUn was doing, and we can learn a lot from how Jonathan Shapiro found out what they were doing as well. So make sure you leave your questions you want to ask me in the comment section of this video. Make sure they're high quality questions, because if I get a lot, I might have to skip your question if it's low quality. So leave those questions in the comment section. And the last thing I should mention is I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs.